All right, so very good evening to all our mentorship traders. We are back with our Friday evening session. Today being the 4th of September 2020, we have rolled on to a new month. And this week has been particularly difficult, I would say. Before I go on to my weekly analysis of the sectors and few stocks, a very warm welcome to all our new joinees who have joined the community over the last 1 week. We'll be talking about the overall markets first, and then we'll take up your doubts and questions. So this week has been particularly difficult, I feel so. This is the daily chart of Nifty futures. Today we have a pretty gap down opening, and after that the market didn't do much to gain from the day's low, though towards the fag end there was a bit of effort. If we break down the price behavior that we saw over the last 5 days this week, this was Monday, which was a sharp sell-off. Then a bit of damage control over the next 2 days. Thursday was not much to take away either from the bulls or the bears, and then Friday today was a gap down followed by some decent amount of selling. If you look at the weekly chart, you will clearly see a big outside bar, or in terms of Japanese candlesticks parlance, this is called a bearish engulfing pattern. And it's close to a 3% cut from the index. And when we take a look at our momentum indicators, this is ideal for these indicators to drop below the overbought territory and create some headroom. But this week's price behavior, what I find more interesting is essentially the 75-minute time frame, this one. If you can clearly see this channel, this is essentially a rising channel from back of mid-July. This is 14th of July. July to August and August, and so I'm looking at a 1.5 month rising channel, and this channel has held on to the prices, acted as very good source of support, extremely good source of support. This was this last Monday's low, and on the upside also not a bad source of supply either. Now this channel has proven itself to be a very good zone of demand and supply, especially demand, especially the lows. Now if you come close to what has happened recently, is the prices have given away from this channel. And this given away or the closing below the channel happened primarily today. Gap down, a bit of solace, and then further sell-off. Now, generally when we see that these kind of decently sized channels are tested or broken, we should not be excited, okay, the channel is broken and everyone should be bearish immediately, because we tend to see a pullback, a bounce back, and the prices attempt to go back above the channel. And I feel that the index will do the same early next week. It will try and place itself above the channel once more. If I'm completely wrong and if we see another gap down or a weak opening, then definitely we are gone. Means this channel is gone, and the width of the channel or the height of the channel, whatever you call it, is something that you should be expecting the same length on the downside. I just drew it like a freehand drawing, but if you talk about the levels, so we're looking at around 350 to around 850, that's 500, around 400, 450 points from the breakdown. So if you consider 11,430, so you're looking at 11K. A little tad below 11K. So essentially, if this sell-off continues, these are the kind of levels that the lows of early August 10,900, 11,000 are the lows, that this channel will open up for the prices to fall further down. One can use the anticipated bounce back as an opportunity to sell also. If you see the prices hovering close to this kind of zone, which is 11,440, 445, 450, etc. levels, and then it cannot sustain and you have fresh signs of sell-off, then the next leg can be and generally are very sharp. So if you look at how the markets have behaved, how prices have behaved, and remember, we still have this red channel. We are focusing, or we have kept this red channel for many months now because it did provide supply. And this time, exactly not, but very close to it. We were looking at 11,800 and 11,794. So we continue to keep this for resistances, and we have the 75-minute time frame, which is clearly given us a trend reversal. So are we completely bearish? We are definitely looking to go bearish, cautiously bearish next week. If the index fails to bounce back or find itself back above this channel, then the chances of a 11K and sub 11K is very, very high. It opens up as a very high opportunity. So that's how the Nifty is placed. Let's bring in our RRG graphs, something that we had discussed and introduced in our last week's session. Let's take a look at how did the sectors play out and what are the sectors to look for according to this flow of strength. Now, these are all the NSE sectors that I have created on this platform, stockcharts.com. And first, I have kept it to 1 week. I am just looking at the percentage change of over the last 1 week. And we have a standout from IT. We have a standout from IT and consumer durables and FMCG because they have lost just a little. All the sectors are negative. And the biggest losers are the ones that led the market on the upside. PSU banks, Bank Nifty, private banks, realty, etc. Now that's just a 1 week perspective. But if you look at in which quadrant they are positioned right now, their particular flow, and if we, let's say, give it a 6 week, 1.5 months kind of a look, one minute. Just trying to get all of them in place. Yeah, there you go. So if I thought in terms of the tail, that is in terms of the relative strength and the underlying momentum of the relative strength, then your IT, auto, small cap, metal, and mid cap are in the leading quadrant. And within the leading quadrant, it's the mid and small cap, and metal, and IT. So IT, small cap, metal, and mid cap in the leading as well as rising momentum. It's the auto which is losing a little bit of momentum, not much. We'll talk about auto. It will be a very interesting sector to look into next week because it will try to gain some momentum. So these are the sectors that continue. So out of these, two of them, small and mid caps, are your broad-based general indices. Cannot pick out any particular stock from them. But IT, auto, and metal continues to stay strong. You remember that the banking were the ones which led the recent move, and the Bank Nifty gave a phenomenal breakout. Remember this one? This phenomenal move has gone through a pretty decent correction. I like this kind of correction because it has got the prices back to the 3 moving average zone. It's close to, or it's actually broken below the previous highs, which should act as support. So I feel that the index, if it manages to find some support and bounce back and finds itself back to that rising channel, then the banks will again try to support, because the banks have come down to their support zone, number one. Number two, all these sectors, the PSU bank, the bank Nifty, the private bank, and the financial services, all of them are in the improving quadrant. What this generally means is either they will lose momentum and gain momentum, lose momentum and gain momentum, or they will gain strength. What does this mean? This means if the index bounces back, then it's these stocks which will bounce back more. If the index falls, they might fall at the same pace like they have this time or less. And that's why it can lose momentum, but it will try its best to lead. So at any point of time, now or later, when Nifty bounces back, either now back to the channel or later from 11K level, it is this pocket of the interest sensitive, let's say banking, auto is not here, but anyways, banking and is real estate there? Yes, real estate is also there, which are likely to participate in the bounce back more. That is what this quadrant is. That is what I make out of my experience of reading these quadrants. Now let's come to the weakening ones. Pharma is weakening, energy is weakening, and commodities are also weakening. Out of which pharma is a defensive play, but it has been choppy recently, last week also. So don't see much happening. On the other hand, it is the IT which is holding off really well. We spoke about TCS, we spoke about Infosys. We'll look into those individual stocks also right now. And at the fag end is the consumers and FMCG. One thing I like about both these tails, the way I have read these graphs over the years, is I see very early signs of an improvement in the underlying momentum of the relative strength. Means they're trying their best not to underperform, and slowly they will find themselves back to the improving quadrant. So if I'm a long only trader, if I'm a long bias trader, I will be looking very closely at the banking sector, the financial services, to buy on a dip, number one. And if the market comes down but few pockets of strength which will continue to go up, in that case IT, metals and auto are the one. And the defensive play among FMCG and consumer durables, most of them you'll find a little bit beaten down and close to supports. They can be a little risky bet. You can buy primarily on your long only positional portfolio. Now, breaking down into few stocks, if I take you to the auto, and I have created the list of the stocks which I track within the auto, and it's sorted by default by the tail. You can clearly see it's Tata Motors, Bharat Forge, Eicher Motors, Bosch, Motherson, Apollo Tyre, TVS Motor, and Maruti. So the mix of auto ancillaries and a little large caps like Maruti is also there in the leading quadrant. In the weakening quadrant are your two-wheelers, Hero MotoCo and Bajaj Auto. Okay. Now I would bring your focus to something like Hero MotoCo and Bajaj Auto. Let's say Hero MotoCo. Look, the positioning of Hero MotoCo, it's here. If I break down this quadrant, if I draw this, it's made up of two quadrants like this. On the horizontal quadrant, I am far off, I'm right here, which means that it's a relatively very, very strong counter. The problem is it is significantly lower on the vertical quadrant here. So it has lost a lot of momentum. Now, how does this look like on the charts? If I show you the chart of Hero MotoCo, you will see that the erstwhile previous trend significantly up compared to Nifty. This is the outperformance. This is why it is right here. And it's because of this fall that it has given up all the momentum. That's why it's fallen. That's why if you see the tail, it's been down. Now this stock is back to its supports. previous highs is definitely going to act as a support. Similar story with Bajaj Auto. It is testing the long-term moving averages. It has gone through a previous strong uptrend. But if you look at the 3 moving averages, it has cut down. Compared to Hero MotoCorp, it's a far stronger counter. Now you come here and you look at Bajaj Auto. See, it has already started to drift on the left-hand side. It means it has already started to lose relative strength. This is clear from the chart of Bajaj Auto. So this is how ideally you should read it. This is how it should be done. But I'll be keeping a close watch on Hero MotoCorp next week for sure, because it seems like from the supports, the stock can also bounce back. Apart from that, Maruti stands out. It's gaining momentum. It's gaining strength. Sorry, this is Marico. This is Maruti. And it's given a wonderful breakout and it's bounced back from the recent one-day sell-off. This is the kind of strength which is clearly shown by stocks like Maruti. Then we have Tata Motors also. IT, let's take a look at IT and then we can go on to your doubts and questions. So IT, all the tails, most of them are positive. We spoke about Infosys, how see it from a weakening, it has bounced back from leading. So remember this I had discussed and I did tell you in the first class, which was last Friday's session when I first spoke about RRG graphs. See, this is a 10-week tail, right? If I increase it to, let's say, 13 to 14 weeks, let's say 13 weeks, look at how these things means you should not make any assumptions. For example, 13 weeks back it was here and then it came down somewhere here. This was around, let's say, 8 weeks back. If the movement has been like this to weakening, by default your mind will expect it will go to lagging, then it will go to improving, and then it will go to leading. So one should avoid the IT stocks, or one should avoid Infosys because it's weakening. But that's not the case because it's all calculated from price. And if the stock outperforms, which it has, now it has gone back to the leading. So general flow is always clockwise, but in between it can give all these funny moves and then move clockwise. It always moves clockwise, there's no doubt about it, but not always in a circular manner like that. So within the IT, I continue to like stocks like Infosys and TCS. There you go. Stock has again come down after the 2-day bounce back to its supports, and it feels like it has the potential to support the market and give us a breakout. A much needed breakout came from TCS on Thursday. We've been talking about this, I think, regularly in our live market sessions. Friday today, it sold off alongside the market, but looking at the weekly and monthly charts, this stock is all poised to perform better than the market going forward. So I'll sum it up quickly for you. Next week seems to be very interesting. After a lot of volatility that we saw this week, the market will, I think, try to bounce back and get itself back to the channel. But if it fails, then we are looking for 11K or sub 11K, turn bearish in that matter. In terms of sectors which will bounce back with the markets are your banking and financial services, add a little bit of reality to that. And the sectors and stocks which can continue to outperform and we can look to trade the breakouts are your auto, IT, and metals. Bottom fishing kind of or buying stocks which are at very, very strong medium-term supports are FMCG and consumer durables. All right, I hope this makes sense. We'll see how it plays out for us and our trades next week. Now, as always, let's move forward and discuss your trades, your doubts, and the questions that you may have.